So up next, we have a presentation from Nutritional Growth Solutions with the ticker code NGS, a company focused on nutritional products to support growth development in kids. To tell us more about their products and the US expansion plans, today I'm joined by CEO Steve Turner. Good morning, Steve.
Good morning, Jane.
Let me bring up your presentation.
Thank you. Thank you for joining us today. So Nutritional Growth Solutions, we are a kids nutrition company. This is our customary forward-looking disclaimers. So encourage you to read that. It's been published. So this is our current corporate snapshot. We recently updated it to reflect our share price improvement over the last couple of weeks. Obviously, typical look at what the company looks like. Want to really speak to essentially the highlights. I was recently appointed CEO by the board, just actually a few weeks ago. And we're really trying to capitalize on our successes in the US. So our product is currently available in Walmart. We're actually available nationwide, currently in 408 doors, soon to be 465, starting in May, and really looking at how we can use that retail expansion and our successes with our sales performance so far in Walmart as a catalyst for growth as we continue to look for additional retail expansion. We'll continue to basically capitalize also on opportunities in other markets, look for both strategic as well as distribution relationships. One of the nice things that we're working with is the fact that we actually have a product line that's based on a variety of different intellectual properties that stem from the Schneider Children's Medical Center in Tel Aviv, Israel. So we have a patent estate that currently consists of 6 patents. We have a composition of matter as well as method of use patents and a variety of different aspects that really are high horsepower behind the formulations that we're marketing. And our margins continue to improve as we sell more and more in our retail and our online channels. Really just unlocking that growth. Everything that we stand for, our mission, values, and beliefs really stems from the work that was done by our founding medical team and the research that continues to go on at Schneider Medical Center in Tel Aviv, Israel. They see a large number of children with a variety of different growth disorders. And really what started our journey in our core formulation that goes back to the beginning, the catalyst or the need that was driving the development of the product was trying to find a nutritional solution for those children that didn't qualify for growth hormone therapy, children that had challenges with growth and development disorders, failure to thrive, among others. And that's really where we started. Everything that we stand for, next slide, please, is really trying to fill those nutritional gaps. And so whether it's a true medical need or really just the anxieties and underpinnings that we all have as busy parents, vast majority of the kids in the world actually just don't have that quality of diet necessary to provide them with the building blocks they need in order to thrive. Really, what we're doing is essentially demonstrating, obviously in this particular clinical study, that's one of many, that nutrition really is an important aspect. That 80% of what we become is genetic, but 20% really is an environment in the food that we provide ourselves to grow and develop. And we fall prey, at least in the US, to treating our kids like mini versions of adults, but in reality, they need so much more. They're building connective tissues, organs, and so on and so forth, as well as trying to grow and thrive. And so it's hard to make sure that they have the necessary resources that their body needs. So when you look at our market opportunity, what's really great about our approach is we have a variety of different opportunities, and our family of products really falls at the center of the intersection of a variety of different large markets, whether it's infant formula and toddler feeding, food and nutritional supplements, as well as the food for medical special purposes. And that's really what we're trying to capitalize on. When you look at our portfolio that we've been able to develop just over the last year, it's pretty significant. And where we started was our Grow Daily 3+ line, and we've evolved that to be a family of products that, regardless of the age or gender of your child, we're able to put an offering in place in order to basically eliminate those concerns of nutritional gaps at all the key stages of growth and development between the ages of 2 and really 18. But our sweet spot is really trying to impact some kind of improvement between 2 and 16 years of age. I was appointed recently. I come from a history of consumer products, starting off on actually the drug development side of consumer products with fancy formulation technologies, and moving my way through really OTC small molecules as well as dietary supplements since the late 90s. Been both involved in accelerated filing public companies, so I understand the needs of making sure that we're meeting shareholders' expectations, as well as basically building and launching a variety of different verticals over the years. I'm really excited about being able to capitalize on what we've accomplished over the last year. So the US for our company has really been the big success, sort of the star in our portfolio, and gives us a lot of ability to really continue to grow and meet the needs of people around the world long term. So we've really done a lot to be able to secure the world's largest retailer and to have a partnership relationship with them, such that we've been able to continue to demonstrate that we not only belong on shelf, but we belong in more stores as we continue to work down that pathway. But we've also been able to collaborate with them and launch new and innovative products into different categories that, once again, just provide us significant opportunity to generate additional revenues. When you look at our growth strategy for the year, it's really built on the underpinnings, the foundational revenues that we get from our e-commerce platforms. So the Amazon and our direct web store sales are important because it's near-term revenue, near-term cash flow that allows us to then fund our efforts in retail. So strategies are going to be to continue to leverage our successes and maintain or increase our sales growth velocity as far as getting product off shelf and meeting that consumer demand. That will lead to an increase in stores, which of course just allows us to unlock significant potential. Continue to expand our product lines in order to basically make sure that we have more than 1 or 2 items on shelf. That's represented with our entry of the Happy Tummies, which will be on shelf in September, Q3, Q4 of this year. And then, of course, leverage our success at Walmart to bring other retailers to the plate. Ultimately, our long-term goal is to get to about 70% of top line being physical brick and mortar store sales, with only 30% of it being e-commerce sales as far as North America is concerned. And of course, continue to basically make sure that we're present and in front of the consumer so that our household awareness continues to grow and we actually can leverage that brand equity in other markets. To kind of give you an idea of what Walmart really represents, it's tough, especially if you're not familiar with how Walmart and how retail works in the US. Interestingly enough, this slide is already out of date. Walmart's annual sales last year was actually 600 million, so nearly double what we're representing here. But the importance is to see the magnitude of what they represent compared to all other channels of business. Of course, Amazon is where we launched our brand and launched our company in the US back in 2018. And when you look at being able to leverage with what Walmart represents for us, it's a significant opportunity. This is actually meant to illustrate really the difference between what can happen with us already basically working with Walmart. So we're already on shelf. The chart on the left is really meant to illustrate what can happen just by changing store count, as well as continuing to increase our sales velocity off shelf. We're currently actually selling beyond a sales rate of 1.2. And what that means is actually we're moving 1.2 units or more across the doors that we actually have distribution. That's actually well above what the initial expectation is. And we're seeing that increase week over week. So as we continue down this path, store count will increase. And as we get stores, we actually get the benefit of pipeline infill as well as the incremental sales. And it actually moves pretty significant exponentially as we go through this journey. On the right, this is really meant to illustrate what happens as we increase our SKU count or the items that we have on shelf. We currently have 2 items on shelf in the toddler feeding space, and we have a 3rd item coming, which will be our new Happy Tummies digestive nutritional supplement that we co-developed with Walmart that's coming in September. So we're literally already sitting on a business that actually has 3 items. And then as we continue to demonstrate success, we'll be able to unlock additional items on shelf. So both of those are expected to happen in the near term. So realistically, it's just making sure that we have the tactics internally in order to support the growth. And we've done quite a bit over the last year and a half to dramatically change how we engage with the end consumer. So we've done a nearly 100% overhaul of our agency partners and our tactics that we're using in order to basically shift from being a medical need, a clinical space, sort of talking to that heritage, but using that as part of our conversation and doing more to engage and generate sort of an emotional play. Emotion is really what's going to move the needle for us. And when you see how we've evolved our tactics and strategies over the last year, you really see the net results of that. So our conversion rates have gone up exponentially. Our ability to basically talk to a larger audience, basically upper funnel tactics, is much larger. But more importantly, our cost of acquisition has continued to improve, but we're lengthening the time at which we're engaging with consumers to generate sales. So obviously our business model continues to be flexible. We have licensing activities that we've done in the past and will continue to pursue. We have the ability to leverage our intellectual property because of what's behind the formulations and work within a distribution model, but as well as just building on our business to consumer, direct to consumer sales, both e-commerce as well as physical in store. So our achievements and growth for the year, obviously we've already achieved a fairly significant opportunity by getting on shelf at Walmart. That began tail end of last year. Realistically, that clock has started ticking for us in October. We also entered into a distribution agreement with Poland, and we've already seen significant growth in our sales velocity off shelf with Walmart. That's going to lead to additional expansion of store count, as well as future expansion of additional items going on shelf. And we'll be able to leverage that success to be able to drive additional interest with other retailers and continue to build our footprint as we go down this journey. We have expectations and efforts that we're putting in place to be able to actually enter into the Australian market, both in independent pharmacies, but also layering onto that through our export Amazon global model that will allow us to do direct FBM or fulfilled by merchant sales of product to Australian consumers and look at other opportunities to be able to do the same thing in other geographies. Also, not to minimize it, but we entered into a clinical study for yet again a further expansion within our range. We have a formulation that's being tested in youth athletes that will actually then bolster our ability to continue to expand our portfolio so that we have a variety of different segments to be able to cater to, most importantly, child athletes. So really, when you look at our three-pillar strategy, again, it's product, proliferation of those products to make sure that we're meeting individual needs and opportunities and segments in the global market, continue to expand our global presence as well as our sales channels. Thank you. And I believe that's the last slide. Any questions?
Thank you, Steve. Great presentation. There's been quite a few, so let me jump through them.
Sure.
So is there an opportunity to sell through Walmart stores outside of the US as well?
Yes, as a matter of fact, that's one of the things that we're working with. Walmart's made a pretty aggressive push most recently into Latin America and Mexico, and they actually have a Walmart Centro Am group that are 900 wholly owned Walmart stores within Central and Latin America that we've already begun discussions with, but it's a longer play because the registration that's going to be required in each of those various territories takes time. But over time, we do expect to be able to leverage essentially Walmart's footprint globally.
Thank you. And with the current cost base, what sales level will create a break-even EBIT and neutral cash burn?
Really, so our business, when you take out some of the bets that we were making in order to sort of capitalize on the markets, realistically is between 5.4 and 5.6 Australian. And when you look at what we're already doing and what our plans and expectations are just for US, we do expect to get to that break-even point this year. And then when you layer on the other opportunities and that unknown element of how quickly we can see a pretty significant ramp up in store distribution, obviously that just moves the needle further forward.
Thanks, Steve. You touched on this earlier, but so with NGS currently targeting other major US retailers, when will we see customer diversification to address the customer concentration risk?
Well, right now, we've already been engaging. So one thing to think of with the retail market and really how retailers think in the US, they think out 9 to 12 months in advance. And so we're already actively in discussions with a variety of different retailers. And there's opportunities both in the short term and long term, and fully expect to be able to capitalize on what we're doing with Walmart to then diversify our retailer portfolio. Interestingly enough, that portfolio, again, is also going to sort of build on what we've already done online. And so I fully expect that we will see at least 1 or 2 additional retailers, but that will be a fourth quarter event, likely at the earliest, just because of the cycle and how they think.
Thank you. And just finally, so how long does product development take and where is it undertaken?
Well, interestingly enough, product development actually can be very quick. One example is with the Happy Tummies development that stemmed from conversations that we had with Walmart directly when I was involved in their open call event last summer. And we went in a short period of months to be able to go from initial wish list concept all the way to finished goods. And now it's just a matter of basically managing the front end as far as the manufacturing lead time in order to get on shelf and in the distribution channel. So it's fairly short. It's fairly low risk. We don't do any of our own manufacturing. So we basically leverage capacities and capabilities with our contract manufacturing providers in order to do this as quickly as possible.
Wonderful. Well, thanks for that, Steve. That's all we've got time for today. Again, webinar attendees should use the contact details on the bottom of the ASX release if they've got any further questions. But thanks again.
Thank you. Cheers.